Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's Harrison Sweeney, a research analyst at LikeFolio. Thanks for being here, Harrison.
Thanks for having me, guys.
All right, so we're talking booze. You live down in Kentucky. You've got booze everywhere down there. But Constellation Brands, this is more of a beer and wine-based beverage company. Shares are down about 8% this year. They're off their all-time highs. What kind of data are you seeing going into this report? Goldman Sachs came out with something positive this morning, but it seems like Modelo is driving this company.
Yeah, it's interesting that you mentioned Modelo because that has been one of the major brands we've seen driving demand growth for this company, as well as maintaining its super high consumer happiness rating. So compared to other major distilleries, other companies in this industry, that really has been the Constellation Brands' main source of advantage, is that it's got the highest consumer happiness score out of all the names. And it's still maintaining that, but purchase intent mentions have been drifting lower over the past year. So that's sort of an industry-wide concern that we're seeing right now, is that although Constellation Brands does, as you can see on the chart on the screen, 80% consumer happiness is great for any company. Very few unhappy consumers, and that is a reflection of Modelo and Corona Extra, their two top beer brands, are really that's sort of the bedrock of their company. Makes up 77% of their sales, and it's actually a similar amount of their mention volume as well. So those brands, people love them, but we've been seeing a gradual decline in the actual purchase intent mentions over time, and that's contributing to what's actually become a neutral earnings score. So you can see here on this outlier grid chart, it is in the top half there. It's showing strength against all of those other companies like Anheuser-Busch and Molson Coors, but it is lagging in terms of year-over-year purchase intent growth. And although that could generate a negative earnings score if this had been a recent downturn, Constellation Brands purchase intent has been drifting lower for over a year now. So this decline is expected by our model, which is why the score that we're looking at is actually +6, which is still a very neutral score, but it's on the positive side. So the happiness is able to offset the ongoing demand decline here. And it's really the weakness from the company's perspective is in its wine and spirits. That's been the biggest weight on its sales growth. The beer segment, which, as I said, is the larger aspect, has been showing significant, well, it's decent growth, but not anything mind-blowing, which sort of lines up with what we're seeing here with just the stagnant purchase intent.
Gotcha.
You know, the numbers I'm reading say that Modelo Especial up about 9.7% in sales. Corona Extra up about 15.6% in sales. Those seem like pretty good numbers. Goldman's note out this morning that, you know, they have a consensus estimate around $2.09. Goldman thinks they're going to be $2.21 or above. So, you know, some of your numbers are relatively calm or mild, but yet, you know, in terms of, you know, positive numbers, it's up near the top of the page. What is holding this back? You mentioned wine possibly holding it back. Now, they've got some pretty high-profile brands, not only in beer, but in wine as well. I see Ruffino on there. I see a lot of big names in terms of wine that they have. And personally, for the record, I see Modelo and Corona. My favorite's Pacifico. They're their third most favorite brand. So what's holding this company back if beer is doing so well? Is it just wine not doing as well?
So what's really interesting is we're seeing a general decline in consumers' interest in cocktails, alcoholic beverages. There's a trend that we track that shows mentions of non-alcoholic drinks. And specifically, those are drinks that would otherwise be alcoholic that people are opting to remove the alcohol. So things like a mocktail, for instance. And we're seeing a large increase in these mentions. They're on pace to be at an all-time high in the current period, up over 40% year over year. So this is also mirroring some outside statistics. Nielsen showed a decline in the amount of American adults reporting consuming alcoholic beverages from 2019 to the current year. So this is a broader trend. And as you mentioned, wine and spirit brands, it's interesting. People do not have the same level of brand loyalty that you'll see with things like Modelo, Pacifico, Corona. All of those make up the vast majority of this company's total mentions. And although it does have a diverse portfolio of wine brands, and they even, I think Svedka is their largest spirits.
Yes, that's their vodka.
Yes, but all of those only make up maybe a combined 20% of the total mention volume. So it's hard to gauge the impact that those are having as far as the drawdown that we're seeing. Now, as far as earnings go, they have struggled a bit with their meeting estimates in terms of profitability, and that's not something that we can necessarily tap into. We are more revenue focused, as you guys know, and this is a company that typically meets their revenue estimates, and I would not be surprised to see them continue to deliver on the top line. Bottom line, there's a lot more question marks. Obviously, they're still facing supply chain headwinds. There's still elevated costs, the inflationary pressures. There's all this stuff is potentially going against them.
Right.
And that's not even mentioning what has been a disastrous investment in Canopy Growth Company. Those shares are down almost 75% year over year, I think. And, the legalization talks they've come back to life a little bit in the past month, but they're going to need to see a significant rally if they want that significant investment that they made to actually stop being just a dead weight on their balance sheet.
Right, and I don't think that's ever coming back, Harrison. It's just like when Philip Morris or Altria bought Juul. They're never getting that value back based on what they paid. Too much competition at this point. But one of the things I wanted to look at the happiness thing real quick here. Sam Adams, down at the bottom, I get it. Their Truly brand is just getting hammered, and it's caused a lot of pain for the stock. But when you have this wide array of different products, just like Constellation does, is that what you're seeing the drag down and why you're only neutral on this stock going into earnings is because, hey, while Modelo and Corona are doing really well, hey, the drag down by some of the wine brands might be the culprit here, because we've seen some of these stocks do pretty decent on earnings and then just fall based on guidance.
Mm-hmm. So I actually had to look into this before the show because I was also curious about that gap between even Budweiser and Sam Adams. And the culprit is surprisingly the Angry Orchard brand. It's a combination of that legitimate happiness being low, but also within the brand there is a word that signifies negative sentiment, angry. So yeah. Those mentions are being overinflated, I would say. So it's not quite as low as it would appear there on the comparison chart, but it is still below where even Budweiser is in terms. And you mentioned that Truly brand. A lot of the seltzer brands are a bit more divisive in terms of happiness. I think it's because it's a new thing and people like to debate about them and put out their hot take about seltzers. So that definitely does detract from their happiness, with Truly being such a massive part of that company.
Right. And I'd be angry if I had to drink Angry Orchard hard cider anyway. So I get that point of it. All right. Great stuff, Harrison. Appreciate it. Have a great day.
You too. Thanks.
All right. That's Harrison Sweeney, research analyst at LikeFolio.com.